Can a new captain at Research in Motion save this sinking ship? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Monday, the 23rd of January. What we're looking at on the screen is a chart, a weekly chart of a RIMM. And as you can see from the very highs, and let me put my let's scope this in just a little bit. And as you can see from the very highs that we saw back here on RIMM, that was back in the heydays of RIMM, I should say, was right here. And that gets you right here. That's about 148. That was the price. And look at where we are now, trading right around these levels, which is really like $15 or lower today right now. It's just not acting very well at all. So you can see the progression, but it wasn't just straight down. You had the move down. And in fact, if we put our monthly trade triangles in, you can see there's a trade triangle right here. That was to get out, exit. That was a very good signal. Get back in right here. So you saved all of this grief and misery on this move down. The market moved up, get out again, in, out. These aren't happening. This is a weekly chart, so it's not happening every week. You're going to get a signal. But here's the signal. And the last signal we had right here was on the March 25th of last year at 57.48, and we're currently trading, as you said, the last signal we had. In fact, let's just clear the screen. Let's go to a chart. And I don't think this change in the head of RIMM is going to make a bit of difference. The market's really, it's a very cruel, wicked market in the tech world. They've moved on. We're into Apple. We're into a lot of different things, and you know, the competition at that level is so fierce that unless you get in, you're really not going to be there. So let's just take a quick look at a daily chart, and you can see today that RIMM is down 6.5% so far based on that announcement. You had the recovery, obviously, from the lows here right around the 12.5 level, and it's sort of, boom, come back down. This market's going to have problems over 20. Unless it clears 20, it's going to be in a bit of a choppy place. We're minus 55, indicating a trading range in a RIMM. So nothing to do in this market. Don't catch falling knives. The trend is down. The long-term trend is down. The short-term trend is down. Only intermediate-term trend is mixed right now, giving you the 55 signal. Best leave this one alone. Let's go to our next market, and that's going to be the S&P 500. And as you can see, we have a very strong upward trend, a plus 90, which is very good. We are going to put our Donchian trade channels on here, and as you can see, we've got some very, very strong movement to the upside. And you can see the monthly trade trial came in at 12.92, currently trading at 13.12, so some 20 points in there. Not a lot yet, but this could be a start of something big. And trends tend to persist in the monthly charts longer than you expect. We're looking for this market to go. We have an upside target zone. I think we talked about this last week. We're looking for the S&P 500 to go to approximately the 1370 to 1400 level this year. So let's see how that plays out. But generally speaking, the trend is your friend. All of our trade triangles are positive. You can see the weekly, the monthly, and the daily are all positive. So let's see how that plays out for the rest of the week. And let's clear the screen, go to our next market. And we've got a lot to cover. We've got some other stocks we're going to be looking at as well. And here's the gold market, rather. And the gold market's a plus 60. We have not been enthusiastic on gold because of the monthly trade triangle being down. We're at the top of the Donchian trade channel, and we're just sort of overbought. So I would not be surprised to see this market pull back and test some lower levels here. But generally speaking, the 1647 level is a very key level. We're currently trading around 1675, so it's quite a ways away. But nonetheless, I would think this market is really just aching to probably go a little bit lower. But nonetheless, it's acting, it has been going higher. It's surprised a lot of people, a lot of bears. But the monthly is what we put our faith in, and that's still negative, and it tends to come back and recur. So let's go to our next market, and that's the copper market. And the copper is in a bull trend, monthly and weekly up. Only the daily is down. And that could change quite dramatically, but nonetheless, it looks as though to us we've got a very large base here, an economic base right here, an energy base we call these, and to push this market higher. So I think, generally speaking, we've taken out these highs here. And I think we can see this market go to, we have the next target zone is around 4 and maybe 410. So that's what we're looking for on the upside in copper. Not to say we can't see some pullback or some further consolidation, but certainly the trend is up, and we're looking for this market to improve from current levels. So let's go to our next market. The next market we're looking at is crude oil. Crude oil is at the lower range of its Donchian trade channel. You can see quite clearly here. Longer term, this market looks like it wants to go higher based on our monthly. And we sketched out a pattern. We thought that potentially this could be sketching out here, and that's this pattern right here. So this, whoops, let me get my illustrator back on here, and we'll take a quick look at this. What we're looking for in crude oil is this type of pattern here. So we're on the right shoulder here. This would be the right shoulder, and this is a big energy field. This is the head, and this is the left shoulder. So I think, generally speaking, we could see this market actually improve from current levels. Let's give it some more time, but certainly the lower end of the lower levels of the Donchian trade channels should be enough to support this market. So we'll see. Let's see what happens. But generally speaking, the monthly is definitely in place for higher prices. Only the weekly and the daily are mixed, giving us this trading range 60 readings. So let's see how that plays out for the rest of the week. And let me go back here. And we actually missed silver, so I want to go back for silver if you don't mind. Silver is a plus 60, is a trading range. This couple of days action, let me scope this in a little closer. A couple of days action here is not positive in my mind, especially the sort of hammer top that we've got right here in Japanese candlestick terms. This market closed lower. I think we could see a pullback quite easily. The monthly is negative. Only the weekly and the daily are positive, giving you the 60 reading trading range. Yes, we can come back, I think, to maybe the 30, 31 level, and we'll see how that plays out. So let's go back to the charts and jump to, we've done copper, we've done crude oil. Let's go to the euro dollar, which we have talked about before. We talked about this last week, and actually we're pretty happy with our analysis of this market. And as you see, we've traded over the 130 level, which is like our first target zone. We're trading at 130.11 right now, which is live. And we're getting towards the high end of the Donchian trade channel. I would say this area right here, this trading channel comes in at 130.74 today. I would say if it gets up over that level, I think it's a good chance to either go short this market because our trade triangles, both monthly and weekly, are negative. And I think we'll see this market come back down. Minus 65, indicating somewhat of a trading range. So nonetheless, I think towards the high end of that range, I'd want to be a seller rather than a buyer. So let's see how that plays out. Maybe the enthusiasm with Greece is overblown. Maybe it's being discounted. Who knows? We've gone from like the low here, we traded as low as 126.25 up to 130 and change. 130, what was the high? 130.50 today. So that's a pretty big move in Forex terms. But nonetheless, this market's still not out of the woods yet. So let's go to our next market. And the next market we're going to be looking at is the dollar index. Now, this is interesting, too, on the dollar index. This has gone from a very plus area to a plus 65 trading range. We're at the lower end of the trading range on the Donchian trade channels. You can see right here. I think this is going to be the line in the sand. The market must hold here, in my opinion. Otherwise, it's going to be in serious jeopardy of even further erosion. So we've had a constant down day. We had the 81.50 was our target zone. We pretty much got there. The market's come down. I think now we're sort of looking at a couple of things. One, we're oversold, and I think that's something to definitely pay attention to. And I think the other thing we want to be careful of is just getting too enthusiastic about being negative on the dollar index right now. So let's go to our next market. And this is the CRB, Reuters Jefferies CRB Commodity Index. This, as we've been saying for some time now, is in a trading range. You just only have to look at this market to see how it's scoping out. We sort of, if you look at this potential pattern we're looking at, it needs to go over 316 on the upside. If it gets over 316, then we're on our way to the much higher levels, probably to 4. But nonetheless, it just seems like it's just meandering along, no strong trend. The monthly is down. The weekly and the daily is up. So you've got this plus 60, which is a trading range, and that's how you should be looking at to trade this market. So let's clear the screen, take this off, go down here. So not much going on with those. The Williams percent or on the MACD, just sort of going sideways. But nonetheless, that's how we see the market. Now, markets that are on the move today. Southwestern Energy is one. It's a minus 75. It's up 7.16. So automatically I'm seeing minus 75, meaning this is a counter trend rally, which in fact it is. And you can see that the trend is quite clearly down in the monthly and the weekly. So what would you do here? Would you buy it? No. You'd want to wait for the trend to roll over and start going back down again and get short. If you were a counter trend trader, you may want to just sell it here and put stops over 34. It's about a 10% risk, but nonetheless, the trend is clearly down from $40 and again from $39. So why would you want to do anything? So we put this in here. You can see our trade trial came in on the 11th of November, excuse me, the 17th of November at 39.72. Boom, straight down. I think we're on our way, and I would suspect that we'll test the 30 level, possibly in the 29 level again in the not too distant future. Looking at the next market on the move, and that's Cabot Oil and Gas, COG, and that's a minus 60, which means it's a trading range. We know automatically. So here we are, the market rally, counter trend rally again. The market's weekly down, daily down, only the monthly's up, which is interesting. You should have this type of scenario, but nonetheless, that's the way things are. Let's scope this out a little bit further. And the monthly kicked in right here at 81.47, so that's underwater right now, but we filter our trades, as you may remember, and we filter them with a weekly chart. So 71.76, we're out right here. You can see it very clearly. So you're not going to take big losses. That's the key thing. Is just, but this market looks to be in a trading range, minus 60. And that's the way we would be treating this market right now. So generally speaking, I think if we go below the lows here, 60, I think the low there was 60.25. If we go below that level, I think we're probably going to see this, all the trade triangles turn red, indicating further weakness for this market. Hey, this is Adam Hewison. We've got lots going on this year. We're very excited about 2012. We also have MarketClub's first Investor Summit. It's going to be held just outside of Salt Lake City in Utah. Lots of snow there going to be happening. And you can give us a call toll-free, 1-877-219-1482, extension 10234, if you'd like more information about the summit. If you're calling overseas, call us at 1-801-341-3981, extension 10234. We'd love to hear from you. We'd love to tell you about what we're doing here. I'll be there, and I'd like to meet you. And also, you have a chance to win dinner with me, and it'll be a lot of fun. So we're looking forward to it, talking about the markets and Market Club and our approach and how it can help you become a better investor in 2012. Hey, this is Adam Hewison, and have a profitable trading day. I'll be back same time, same place tomorrow. See you then.